support of the U.S. economy. For a second consecutive month, the U.S. Central Bank has announced that it's reducing monthly bond purchases. The announcement comes after Ben Bernanke led his last monthly meeting as Federal Reserve Chairman. He will now be handing over to Janet Yellen, who will become the first woman in the job at the start of February. The Fed says that it's tapering as there are signs that the U.S. economy is strengthening. Since December 2012, the Fed has been buying bonds to the tune of $85 billion to grease the wheels of the U.S. economy. Last month, it announced a reduction of $10 billion, and now it's reduced purchases by another $10 billion, as you can see right here in this graphic. Now, the Fed's action follows warnings of emerging markets being hard hit, since it may prompt investors to move money from emerging markets back to the United States. The prospect of a Fed tapering, coupled with fears of lower growth, have put pressure on emerging market currencies in the past week. In a bid to stem that flow, the central banks of Turkey and South Africa have raised interest rates in the past 24 hours. In the case of South Africa, it was the first hike since 2008. It also follows moves by Brazil's and India's central banks to shore up their currencies. So far, the Turkish and South African central banks' actions appear to have had little effect, with emerging market currencies still losing steam against the US dollar. The central bank in Turkey in particular has also been criticised at home, as the Turkish government fears higher interest rates and slower growth. Delano D'Souza has more.
Stunning investors by doubling key interest rates. Turkey's central bank increased its overnight lending rate to 12%. Its overnight
All right, as you could hear there, we lost the audio on that report by Delano D'Souza on the Turkish central bank hiking interest rates in order to try to stem the outflow of money from Turkey and a lowering of the Turkish lira. We will, of course, be bringing you that report later. Let's bring you to the stock markets next, though. American stocks, they're falling back this hour. It comes on concern that the moves by Turkey and South Africa's central banks won't be enough. Also, the Fed tapering is seen to be putting a dampener on trading, with the Nasdaq and the Dow Jones Industrial Average down more than 1%. In Europe earlier, the FTSE fell to a 6-week low. So did the CAC 40 in Paris and the Frankfurt DAX. Same story there, really. Concerns about emerging markets and the Fed Reserve tapering stimulus measures. Let's talk you through a few other stories that we're following for you. Consumers in Germany are feeling more and more upbeat about the future. Research firm GfK says its reading of consumer confidence has hit a 6-year high. It's another sign that the German economy has started the year on a strong footing. A reading earlier this week put business sentiment near a 3-year high. It comes as jobless levels are stable in Germany and interest rates, they are low. Fiat is changing name after finalizing its takeover of Chrysler. The new group will be known as Fiat Chrysler Automobiles, and its shares will be listed in New York and Milan. The legal headquarters of the group will be in the Netherlands, and it will be a British tax resident. In Italy, there are concerns that the company is becoming less Italian, but Fiat says the Italian headcount will stay the same. And the European Commission has unveiled a proposal to overhaul the banking sector. The Commission says it will reduce risk-taking and protect taxpayers from having to bail out lenders. The idea is to bar Europe's biggest banks from trading exclusively for their own profit. A lobby group for banks warns that it may harm banks and undermine lending to businesses. And that is the business news for now. And with that, I'm going to hand it over back to you, Laura.
Good stuff, Marcus. Thank you very much indeed. We're going to take a short break and we're going to leave you with today's web news. Stay with us.